All right, today we're going to tackle a really fascinating thought experiment. What would it actually take for a company like Rivian to see its stock price hit a massive target, say $100? Let's break down the hypothetical blueprint.
It's the question everyone always asks. Is it just about having a great product, or a brilliant CEO, or is it just plain old luck? Well, as we're about to see, the answer is way more structured than you might think.
So let's put a number on it. For this whole explainer, we're going to use this ambitious, kind of crazy target of $100 a share. But the point isn't just to wish for it, it's to actually try and reverse engineer the exact series of events that could, just maybe, make it happen.
And this, right here, is probably the most crucial idea. A massive move in a stock doesn't happen because of one single thing. It's a series of dominoes, and they have to fall in exactly the right order. It's like a perfect storm of the company doing its job and the world outside giving it a major boost.
Okay, so let's start at the bottom with the foundation. Because this entire blueprint, this whole idea, it all rests on a handful of things that the company has to get absolutely 100% right. All on its own, no excuses.
And the absolute cornerstone of that foundation is the R2 platform. Now, what's interesting here is that it's not just about, launching a new car. It's about nailing every single one of these things you see on the screen. It has to have the right price. You need to see insane pre-order numbers showing that people want it. The production ramp has to be flawless, and the reviews have to be glowing.
And let's be super clear here. Getting the R2 right isn't just a piece of the puzzle. According to the analysis we're looking at, it's the key that unlocks absolutely everything else. It is the single most important trigger in this entire chain reaction.
But look, having a great product is one thing. You have to prove you can actually build it, and build a lot of them. This is where a company has to evolve from being a story stock, all based on promises and potential, to an execution story. And that's all about results. It means your supply chain is stable, and you're consistently building and delivering more vehicles than people expect.
The final piece of this foundation, it all comes down to the money. Wall Street has to see a believable, clear-as-day path to actually making a profit. Put simply, the company has to make more money on each truck than it costs to build it. That's what we call a positive gross margin. The goal, as you can see, is to stop burning through cash and become a business that can stand on its own 2 feet.
Okay, so let's imagine the foundation is solid. The company's done everything right. Now it's in a position to catch some seriously powerful tailwinds. These are the big waves, the external forces out in the market that can just accelerate everything.
The first huge wave is a total shift in the market itself. We're talking about that moment when buying an EV is no longer some early adopter thing you do to be different. It's just the normal, default choice for the average person buying a car.
This is what tech people call the S-curve of adoption. For a long time, growth is kind of slow and steady. But then you hit this tipping point, and boom, growth just goes exponential. This is usually pushed along by stuff like way better charging infrastructure or huge companies buying EV fleets, which tells everyone, hey, this technology is the real deal now.
The second massive accelerator is a change in the economic weather, specifically when the Federal Reserve starts cutting interest rates. For anyone selling expensive things like cars, this is a really big deal.
So why does that matter so much? It's really simple. It means cheaper financing. Lower interest rates mean lower monthly car payments, and that makes it brand new EVs suddenly affordable for a whole bunch of people who were just sitting on the sidelines before.
And this chart just illustrates that point perfectly. Look at the bar on the left. When rates are high, demand is kind of stuck. But when those rates come down, that's the bar on the right, it just unlocks this huge new wave of demand. It's like a shot of adrenaline for the whole car industry.
All right, now we get to the really fun part. We're at the top of the pyramid. These are the wild cards, the totally unpredictable, high-impact events that could act like pure rocket fuel and just supercharge this entire story.
The first wild card? An energy shock. I want you to just imagine some major geopolitical event happens that sends the price of oil spiking, and it stays way up there, over $120 a barrel.
So what happens then? Well, you get a sudden, dramatic shift in how everybody thinks. When it costs an absolute fortune just to fill up your gas tank, the argument for switching to an EV becomes impossible to ignore. It forces people to reconsider EVs, not because they're trying to save the planet, but because they're trying to save their wallet.
And this brings us to the final and maybe the most important wild card. Because after all the hard work and success, what actually makes the stock price go way up? The answer is institutional accumulation.
This is when the big money shows up. We're talking giant investment funds. And they decide, hey, this is the next big thing. And they start buying up millions and millions of shares. It's their massive buying pressure that physically pushes the stock price toward that $100 target.
So, let's put it all together. We've looked at the foundation they have to build, the accelerators they could ride, and the wild cards that could change the game. Now, let's see how all these dots connect into one single blueprint.
And here it is, the entire chain reaction. Just look at this sequence. It could start with an external shock like an oil spike, which kicks off a huge surge in EV demand. Then, Rivian has to execute perfectly on its R2 launch and production. Once it proves it's on a path to profit, the Fed cutting rates just throws gasoline on the fire. That's the moment the big institutional investors pile in, and their buying is what could ultimately drive that massive expansion in the stock price. Every single domino, it has to fall in just the right order.
At the end of the day, the whole point of this blueprint isn't just about a number on a stock chart. It's about a complete transformation in how the company is seen. The whole goal is to go from being a cool EV startup with a lot of potential to be known as a mass-market, profitable growth company with proven, undeniable results. That's the grand prize.
Which kind of leaves us with one last big question to chew on. This blueprint, it lays out a pretty clear, logical path. But man, it depends on so many things going perfectly right, both inside the company and out in the world. So it makes you wonder, is a plan like this a real blueprint for success that others can follow? Or is it just a description of a perfect, unrepeatable storm?